us yesterday. Say hi to everyone here.
What's up, Igor?
Hey.
All right, let me share.
What's up, guys? Sorry, I don't have my camera on, but I'm on my laptop and it's a little tweaking.
We're gonna wait for a few more people to shuffle in, and then we'll start the call here. So everyone, gather up your questions. In the meantime, I'll show you guys the house while we wait too. All right, can you guys see my screen? Yeah, super cool spot. It's I want to say it was built like a year or two ago. It's like a brand new build. Really cool, like modern, kind of sleek look. I might get a trampoline in the backyard. 2 stories. I love houses that have bedrooms on the second story. I don't know why. It's my jam. You can actually see the strip from right here. It's pretty cool, and it's in like a super quiet, gated neighborhood. I'm not really into tract houses, to be honest. Like cookie cutter houses are not my thing. But that's like all Vegas really is. So
that's all it is.
What?
That's all it is out there.
Yeah, literally, it's all it is. But it's one of the nicer ones that we found, and we looked at a bunch of houses yesterday, and luckily it was like boom, super smooth. We went there. The lady's from San Jose originally, and we just hit it off. My girlfriend and I we put the charm on her, and I kid you not, from yesterday till today, we probably had 8 phone calls with her. Just she loves chopping it up with us. I'm playing tennis with her husband. They're gonna go on walks with her. Like we're in like Flynn, baby. So that's pretty exciting.
Is Sarah moving out there with you?
She is. So yeah, we're gonna keep a spot in San Diego. So we'll have 2 spots, but she's gonna be claiming residency in Vegas for no state income tax as well. So she'll do 6 months here. It'll be kind of jumbled up. So I think the plan is we're going to move out here in like 2 weeks, and then we'll go back to San Diego June, July, and then come back here, do like the fall and winter here. So we'll spend 2 months in San Diego. I'll probably fly back and forth for a little bit. I'm gonna do a lot of traveling these next few months as well. Most of it's not going to, I'll touch on this here. Most of this shouldn't interrupt our call schedules, but I do have some stuff in the pipeline in terms of travel. Mike, I'm going to talk to you about this after, as well as Colton. I might have Mike or Colton run some of these calls in the upcoming weeks. I'm going to Japan in 3 weeks, and then Philippines in March. And then I'm doing a marathon for my birthday in Maui. So there might be some lapse there, but the calls will still be on. So I'll talk to you about that after. So yeah, anyways, I'm not going to bore you guys with any more of that stuff. How's everyone doing?
Good.
Y'all have a good week?
Good.
Oh, yeah.
Oh, yeah. All right. Anyone got any cool stories to tell before we dive into it?
Yeah, nothing.
All right. Mike, come on. You got nothing to tell us about Cabo, really?
Oh, it was a good time. It was just, it was all inclusive. So it was just like a lot of eating and drinking and hanging out by the pool. It was nice. It was super fun.
You are such a married man now. You know you're married when that's your vacation. You go to all
adult-only hotel, baby.
Yeah.
I've actually learned when Michael's gone that we talk so often. I was fucking pissed that he had no cell service. I was like, I needed to tell him like 6 different things, and I couldn't call him to tell him. I was like, dude, you're not to leave the country without cell service.
Yeah.
Ridiculous.
How
it ruined my week.
Yes. That's not, dude. No, it's not very thoughtful of you, Mike.
It's not.
Yeah,
I can't believe you. So
Yeah.
selfish.
Work it all while you're on your trip, or did you keep it pretty much as leisure?
What's up?
Did you work it all while you're on your trip?
Like maybe 30 minutes a day.
Yeah. And you sold 2 properties while you're gone, right?
Yeah, out in Nevada. I'm Prump.
Sweet. Yeah, I'm gonna make a trip out to Prump once I move out here. I feel like I gotta pay.
You have to.
I gotta pay respects. It's the first place I ever bought land. It's what got me into the land business about 4 years ago. So, all right. Anyways, we'll just riff. You guys know the drill here. Q&A, deal reviews, market reviews, questions. Let's just fire them away, and we'll dive into it. Who wants to go first?
I could go.
Yeah, let's do it.
All right, so I'm still just doing my market research, but I found 3 subdivisions that I think look pretty good. One of them I found like 500, the other one 400, and then the third one is only 100. Is it worth mailing to the subdivision if it's only 100?
I'll counter you. Why would it not be worth sending it?
Yeah, that's what I was thinking, but I just wanted to run it by you guys.
Yeah, there's absolutely no harm in doing it. Some of my best campaigns have literally come from mail sends that are 40, 50 pieces. Like we've had great deals come from it. There's no reason why you shouldn't or wouldn't do it.
Yeah.
The problem is if you're using Rocket Print Mail, they do have thresholds. So you just like you have a bunch of small ones, save them up, send them all at once. That way you can meet their threshold. But yeah, absolutely. I mean, I think some of my best subdivision deals have come from small data sets. I think for whatever reason, people just scoot over that. It's not enough data. They just avoid it. And it's very, very easy to price. So I'm a big fan.
Exactly. That's what really attracted me to that one. I'm like, wow, this is great. It's so much easier than all the other ones.
Yeah. And truth be told, most subdivisions that are decent aren't going to have 3,000 records, 2,000 records. Right? A lot of like the highfalutin in-demand subdivisions that actually catch a pretty decent price, they're usually 300 lots, 200 lots. And that makes sense, right? These aren't ginormous subdivisions. The ones that have too much supply and have a big data set, I've actually found a good indicator that it's not a place I want to work. So that can be the inverse can be a kind of a telltale sign of like, maybe I don't want to do this. A lot of my worst subdivision deals have come from these behemoths where there's like 3,000 records.
Okay. I also asked this in the Discord, but I just want to, I guess, talk a little bit more about it. But one of the subdivisions, the HOA is 500 a year. And I think, Mike, you responded to me. You said it really shouldn't be a big deal as long as everything looks good.
Yeah, sorry, go ahead, keep going.
Nah, that's pretty much it.
Yeah, I've never looked at the price of an HOA and have that ever implemented influence a decision. If they're cheaper lots, like under 10 to 20,000 on the sell side, I would probably stay away from an HOA just in general.
Yeah.
Whether it's $100 a year or $500 a year, just because an HOA means restrictions. It means like building requirements and maybe an architectural committee, like whatever it may be. And on those cheaper lots, people just don't really want that. So what's the price point of this market you're looking at?
I can look again. All of them would sell for over 30. So
okay, I wouldn't. If there's one selling on Redfin that you see in that same area, then clearly people don't care. Yeah. So I don't really look too much into HOAs. It's nice. You should look through them for your own knowledge to see like what the square footage requirement is, or what the tap fees might be to hook up to water or sewer. Mm-hmm. But if there's sales in the area, that means there's demand there. I don't look too much into it other than that.
This is also it seems like it's more of like an outdoorsy type HOA. I don't know if you guys ever come across that, but it seems like not a lot of people build houses. It's more for like ATVs and like hiking and like horseback riding and stuff like that. Is that like
HOA is not always a bad thing too? Like a lot of people like it. Keeps the neighborhood clean. You don't have a bunch of like gross tents and like RVs like dumped around. So they're not always a bad thing.
Yeah.
Okay.
Cool. So I think just to piggyback on that, it's something I do look at, but again, Mike's right? Like the demand's going to tell you everything you need to know. If properties are still selling, the market's willing to bear the HOA costs. There is a relationship though between annual dues and the price point of the property, right? So if this was a $7,000 property that you're going to sell and it's $500 a year, that would trip me up. And some of my first subdivision deals were out in North Carolina. We were buying these properties for $1,000, selling them for $5,000, and the HOA dues were like $2,500 a year. That turns out to be a pretty big problem because that audience can't swing HOA dues like that, right? Yeah. I have seen HOA dues too, where I think it is a line in the sand that's too far. I've told you guys about that dollar deal that's still on title that we're buying right now in North Carolina. I want to say the HOA dues are $5,000 a year, 5 or 6. Now it's got like a PGA golf course in it, which is cool, but that's pretty insane. I'm going to take a chance on it at $1, but in most cases, I'd probably walk away for something like that. But general rule of thumb, like HOA dues, I think anything under $1,000 is not really anything to bat an eyelash at. Okay. Really, the CC&Rs, that's where you want to spend time digging into codes, covenants, and restrictions. Also, this might be more of a POA than an HOA. Property owners.
I might be getting that mixed up actually, because I remember I did see POA. I'm like, is that the same thing? Or?
Yeah, same thing. The connotation is just a little bit different in terms of like the audience who's going to be buying land out there. More recreational, HOA, homes. Yeah, more folks.
Okay.
Residential. But yeah, good question. At $30,000 and would you say $500 a year? I don't think it's a big deal at all.
Great.
Yeah.
Cool.
All right. Who else got questions here?
I got a question. I'm live. How do you guys pay your VAs?
What platform do we pay them on?
Yeah. Do you pay them like independent contractor? Do you work them into your own payroll or?
Yeah, so we pay them as independent contractors. Essentially, we pay them weekly. First off, that's a huge advantage for labor overseas. It's a pretty big like value that you can bring to them. So what we do is we have them submit their time card every Friday. If they like close the business, they don't submit their time card by Friday, they're not getting paid. That's just we're sticklers about that. They have to get that in. Same thing with like their report cards. You'll see the templates inside the program. The report cards, time cards, those always need to be sent in. And then I have one of my VAs send out the payments every single Saturday. We do it through wise.com, and that's how we process the payments. That just plugs right into their bank account. So that's true for anyone in any part of the world. Like you can just send it off to their bank account. Super, super straightforward. I think we have a link for it in the discount and tool section. And then, yeah, we just treat them as independent contractors. Obviously, you don't like do anything with filing with IRS or anything along those lines like you would with a W-2 or W-9. So yeah, what we do for commissions too is a quarterly payout. So they get their whatever their stipend is for their hourly rate weekly, and then quarterly they get their commissions.
Cool. Thank you.
Yeah.
I hadn't gotten to that section in the program. So sorry for making you repeat.
No, you're good, man. Yeah, I like wise.com too, just because it's pretty damn quick to get them their payments. And you got to think like, even if they're getting paid well, a lot of times, especially in the Philippines, the one sole provider might be providing for their whole family. So the money goes quick. And so to be able to get paid weekly and get it into their bank account same day is a big deal for them. So I like wise.com. Who are you hiring again? I know you were talking about hiring, was it a dispo manager or a generalist VA?
I think it was your dispo person, Keith or Keith. Yeah. Is Keith?
Keith.
Yeah, and we have another one that I'm training right now. So she'll be more just like on communications, and we do have like a bit of dispo, but it's not anywhere near what you guys have. It's just going to be repos from notes.
Okay.
And we may have her just make TikToks as like part of just something that we offer, because a lot of our partners, they're not doing TikToks and it's not fitting in. So we'll just do that for you. That's
a great value add for your operators. That, and she does a great job. I don't know if she showed you any of her previous work, but she's actually phenomenal. And so what we do is put it on Instagram Reels, Facebook Reels, and TikTok, and YouTube Shorts as well. And some of them they've hit. Some of them have done really well. We haven't directly sold anything recently from them. We had a few go off last year, but she's great at that. She's great at like a lot of VAs, very binary, straightforward orders and like tasks, but she doesn't really read between the lines much. But for like just general communication, templated stuff, she'll do wonderful. But yeah, glad you took me up on that. She's awesome.
Yeah, absolutely. Thank you.
Yeah, for sure. All right, who's next? Igor, you got any questions for us, man? I know you just started the program last night, but it sounds like you've been chewing through some of the modules already.
Oh yeah, I actually do have plenty of them.
Okay. Let's do it.
Yeah, I stopped today on the module about the picking the market live.
Yep.
So for me, I want to focus mostly on cash sales and stuff like that. And it's not more sell the financing. I don't think I'm in the phase to touch that yet. Yeah. So I was thinking about the rural recreational land, the big ones. Actually to ask that in the Discord. I don't know if that's the best idea for me. As of like you said that they're mostly for financing. I mean, not mostly, but like preferably. Plus, my capital, I would mostly rely on partners, right, and stuff like that.
Yeah. So I think that when we look at owner financing, it's a tool. We don't always get to say this is for sure going to be a cash sale. This is going to for sure be an owner finance sale. What we do know is, so in certain cohorts or audiences of buyers, we can figure out that they have a preference. Like if I go and buy a 5-acre in Apache County, Arizona, high likelihood that that's going to be a owner finance sale, right?
Mm-hmm.
I really like the kicker for this is that if there's enough demand, you'll have enough different buyers coming to you that you can be a little more choosy. We have a property today in Tennessee. We woke up this morning, we had like 4 offers on it, right? And they're all over the map. Some are finance, some are cash. And so we can be a lot more choosy because we're working in areas that have a good amount of demand. I think as a general rule of thumb, though, you are right. Like a rural infill or an infill, typically cash sales are going to be much more common. But we also want to be mindful of what's going on in the broader market right now. So I would shy away from infill. Rural infill, I think, is fine. And rural recreational is fine as well. I think that you just really want to be mindful and looking at demand and also looking at what are your competitors doing out there, right? So if you go and see that you're looking in a market and everyone else is offering owner financing, well, that might be kind of customary. And that might be something that you need as well. So it's something to think about. But I wouldn't shy away from owner financing. And I'll tell you why. Like as we gear up for 2023 and as we move into this year, so far January has been really good. I don't know what you guys have been saying, but January's actually been better than I expected, better than a lot of the months in Q4. But my hypothesis has been that owner financing is going to become more and more prevalent just because people have less money in their pocket nowadays. Could be wrong, but what I'm seeing is this will help you sell your properties faster. And so we're selling a lot of our owner finance properties in about 30, 40 days. Cash sales are closer to like 60 to 90 days right now. And what you can do is once you sell that property on owner financing terms, you can actually go and get liquidity back into your business by selling the note. And so you can sell those notes at a discount, right? Talk to this guy, Greg, over here, 65, 70, 75%. It depends on the quality of the property, the quality of the note, how seasoned it is. But you can go and capture value and take that back into your business. And if you go and crunch the numbers, you might say, hey, if I sell this property in 30 days, and when we sell it on owner financing terms, we always sell at a higher price. And if I take 70% of that, you actually might end up with more money in your pocket than you would have got from a cash sale. And in fact, you might shave 60 days off that turn time. So I don't think it's something to shy away from. I think it's something to keep in your arsenal and utilize. Now, I know that you want to prioritize sales, and there's things that we can do in terms of market selection to help that. But I would absolutely be offering it on all your properties. I think especially where we're at in the market right now, it's paramount.
Okay, so by selling the note, you mean we would basically just someone else would take over the property and like they will gather the payments and I will just sell the note for cash? That's how it is, or?
Yeah, so think about it like this, right? There's many investors out there who are attracted to the land business, but they don't want to run the land business, right? And so if you have a note that's worth $100,000, you could go and find an investor, and there's people like that in our Discord group, and they might want to pay you 65 grand, 70 grand for that note. And then they'll collect all the payments and the additional, $30,000 or $35,000 that you sold at a discount. So they're getting the collateral of the property, so they could always resell it if they needed to. And they're getting the monthly cash flow from the notes. And what you're doing is liquidating your position in it. Now, there's a lot of different structures out there. Some people will manage the notes for the investor. It's more common, though, that you'll just sell it off to them and then they'll take over the note and manage it. And so in a situation where that happens, obviously we can help walk you through it, but no, that's an exit strategy. Now, here's a caveat. If you've got a podunk little 1 acre lot in Cochise, Arizona, that's worth $3,000 that you sold for $5 grand on owner financing terms, not really something people are going to want to buy from their standpoint. But if you've got a quality property in a good market and it's got a decent total note value to it, think 10, 20, 30, 40, 50 grand and above, people want that. People desperately want that. Think about it right now. There's a lot of unknowns, like the stock market, not doing so great. Crypto, it ran up the last few days, but the last few months have been pretty terrible. There's a lot of money sitting on the sidelines that would love to have a note that brings in cash flow backed by a property. So you have a lot of power when you sell a property on owner financing terms. And again, you can sell it faster than you might have been able to on a cash sale because there's just more people that can afford an owner finance deal. And you might have sold it at a higher price. Not always, but it does happen pretty consistently.
Okay. Yeah, that makes sense. Thank you.
Absolutely.
Do you offer owner financing on all your properties?
Every single property. I think we're doing ourselves a disservice if we're not. The cool thing about owner financing too is that one, most people don't offer it, right? The kinds of properties we go after, if you call our strategy mid-tier acquisition between $25,000 and $125,000, there's a big gap in the market where it's just not really being offered, right? So it gives us a huge leg up on our competition. The other thing is that you can be so creative with how you structure your terms. Most buyers really only care about the down payment. If you get their foot in the door on a low enough down payment, I mean, and we're not trying to rob people blind here, but you can make the terms whatever the heck you want, seriously. So you have a lot of creativity there And then you can go and sell that note, right? So if you can get creative and get someone in the door for a low down payment, but the total finance value is substantially higher, selling it at 70% of its value may be way higher than what you would have gotten on a cash sale basis. The other things right now, like if we want to talk about competition in the land space, it's never been on the acquisition side. Competition has always been on the dispo side, right? If you go to Costilla County right now, there's so many properties for sale that you'll just get stuffed to the bottom. So that's been the competitive aspect of the land investing business. Then you stack that on top of a market where buyers are on the sidelines or are very cautious. We need a way to stand out. We need a way to have a faster turn time. What I found is great marketing, being on the right platforms, but really owner financing, because we're opening ourselves up to more buyers.
Yeah.
So I think owner financing in general is a great strategy, but really for the arena that we play in the land world, people just don't do it. It's unbelievable. A lot of the markets we'll be in will be the only listing with owner financing. And I think right now too, it's even an additional kind of value add because getting bank financing is pretty tricky. We've had these 3 properties in Arizona that have been a nightmare. We get so many offers on them. We've had so many false starts, and they've fallen apart at the very end because the banks have been pulling out on these construction loans and whatnot. And so we weren't offering owner financing initially, and we should have. And then we went through, overhauled all of our listings, added owner financing into those properties and everything else that we have. And sure enough, now they're moving, right? So yeah, it's a great strategy.
Is there a way to make owner financing work with a partner? Would they not really want to do that?
No, there is. So I think that, and you could talk to Greg too. Greg might have some input on this. First and foremost, I think full disclosure, like from the jump, is important, right? So having that conversation before it comes up and you have an owner finance offer, figure out what they're looking to do. In the past, when I was doing a lot more JV stuff, more so than I'm doing now, I probably had 20 to 25 owner finance arrangements with JV partners, bigger ones like 50, 60 grand or more for these notes. And the trouble was not an issue on their end. It was more an issue on my end. The collection side and paying all these different people out, it started to become a bit of a headache. I didn't like that. Most of them had no problems with it. Now, just like you were shooting for getting our money back on an owner finance deal and really no longer than a year, ideally, you got to try to create the terms so you can get your partner to that same point, right? Yeah. Some land investors out there want to split the down payment between them, the operator, and the deal funder. I think that's absurd. The cash always needs to go to the deal partner first. Now, my catch, though, is I do want to split payments from day one. I do need to get cash flow rolling in because I have real costs in the property too. You could give them all the payments until they get their basis back, but it was more typical, give them the down payment and then split the payments. And so, yeah, it's been incredible. We probably created, I don't know, $300,000, $350,000 worth of notes with none of our own money in it. Like, that's going to be pure profit for us. Yeah. But it's just about talking to them beforehand. It's not my favorite strategy, though, just because of what you have to do in terms of paying them out and whatnot. Great. What do you think about that?
That's kind of how we started, because we're kind of a backwards funding company. We're a finance company first. We were never into land, and then we started buying some notes, and then we started funding some deals, and then we saw some of the cash deals come through, and just the rate of return. That's our main focus, is our annual rate of return. The return is so much better on a cash deal that became our primary focus in the past year. It just really complicates things when you're having to split down payment, split the monthly payments. It's not that hard for us. Like, we have the system in place. We already have a robust loan software that we can just plug into. But the return rate is too slow for everybody, especially a lot of the people we deal with. They tend to be within their first 12 deals, and they don't really want to sign up for notes. They'd rather push for cash sales. Yeah. I do want to bring notes back into the business, but it's got to be notes that we can sell, just so we can maintain that rate of return. So I think how that would work is we would just split, like if you wanted to do something that was seller financing, your cash, like let's say you bought for 25 and you sell for 50 as like your cash price, your finance terms are probably going to be more like 60. Okay. As a sale. And you can do that in a month whereas the cash sale might take 3 months. So I'd much rather sell that $60,000 note for like $45,000 in the first month than wait 3 months for the full 60. Like, we would rather just keep it moving. So it definitely does make sense if it looks like a note you can sell and a note we comfortable selling. And that's going to work as long as it fits our other buying criteria. We're not doing desert squares. I would like to add to your point about down payment. A low down payment will make it easy to make a sale, but it'll decrease the value of your note overall. A buyer's ability to pay is a big factor in the note trading business, but it's not really a big factor in the land note creation business. We don't really care that most of the schools teach it. We don't really care about the buyer's ability to pay. They've covered the down payment. They're making monthly payments. That is their ability to pay, but it's like, we haven't qualified the buyer. We haven't done the underwriting on the buyer. As long as it's been less than a year, like, it really tanks the value of the note. But if you can get a good percentage on the front end and the down payment, like 10% down payment goes a long way for the value of the note. I think that would get you another 10% in the value of your note.
Yeah, I think Greg brings up a lot of good points. And I think all notes aren't created equal, right? Like, they can really run the gamut here. So just because, you sold property on owner financing terms, the expectations in terms of what you can capture in terms of discount rate will really range. When we have, I'll share my screen real quick with you guys so you can take a look at these listings. When we have partners on a deal, we are pretty damn aggressive with our down payments. We're always trying to get at least 60 to 70% or more of their basis back in the down payment. And a good amount of the time, I'd say about a third of the time, we get the full basis back in the down payment. So can you guys see my screen here?
Basis being how much you paid for the property?
Yeah, plus title. So we've got this deal that we actually have a partner on. We bought it for, 30 something. We have a $25,000 down payment on it, which actually for the area, we're one of the few listings out there that does have owner financing. So we've had a lot of interest on it. This deal has no partner on it. I will probably sell this property a few times over again. In this market, this deal from a cash perspective is probably worth 13 or 14. I'm offering a down payment on it for $49, right? So if there's not a partner on it and I have no want to sell my notes, which I typically don't, right? I'm in the business of trying to hold notes for as long as possible. Because unless I really need the money, it's more valuable for me to have the note in a lot of situations. So when I have a partner on the deal, the way we engineer the terms are going to look radically different. Two different kind of schools of thought of how you're putting those together. So I really want to be mindful about trying to get my deal funders' money back is in a year or less, and ideally substantially less, because it also benefits you. The more liquidity they have, the more deals you can do with their capital, right? Now, the kicker here is that most deal funders in the land space who are like sophisticated and they do this as a business, some are open, like parcel funders who we use in the program. They're typically open, but you do want to talk to them beforehand. You'll have to spell it out in the contract that you use with them. It's going to range, but most of them are going to be leaning towards a cash basis. When we look at, as you kind of graduate in your funding journey and you go from your bread and butter land investing deal funding company to finding an outsider on the street who's got capital and they're not ready to give you debt, but they want to go the JV route, expectations are so different. And so we were able to get away with a lot more in that area, I think, just because we were using money that getting, 30% on their money in a year is crazy. Right? That's unheard of. Where, a lot of these land investing deal funders, no offense, Greg, have been spoiled, right? So like the expectations are much different. So something to think about as well, just depending on who you're working with. I like having that conversation before I ever, get in bed with a deal partner. Like I like talking about that with them from the jump. And a lot of them are actually pretty open to the idea who aren't the savvy deal funders, because if you're holding title to the property, that presents a real value to them too if it defaults and you guys resell. So it can be a great arrangement. So I would not shy away from it. I just think it really depends on who you're using. Talking about it beforehand and how you're structuring the terms. So this thing fell out. But ideally, the best case scenario for something like this, and we've got a webinar coming up, should be at the end of January or the beginning of February. I'm just waiting for them to confirm the date. We're going to do a Fund and Grow webinar. And so for something like that, you can go and essentially use debt, and that's going to work pretty well for owner financing, where you could raise private debt for that as well. And that's the ideal situation. Yeah.
On that same note, I looked into parcel funders a little bit, and I saw that like how they work everything is as time goes on, the spread changes, like how much they get. Is that normally how funding works?
So in this space, I would say for folks that are like kind of professionals that are doing this at a high level, and that's like their business, it's a coin toss, 50-50. Performance based, in my opinion, is the incentives are most aligned. I think it makes a lot of sense. And we use performance based splits for a lot of our partners as well. We're a little more aggressive with our terms, like 90-10, 80-20 type stuff. And the other side of camp, Greg, you guys just do a flat split, right?
No, we do first month 80-20, 70-30, and then we stay at 50-50, 60-40, and then we stay at 50-50 for the remainder of the contract. If it fits our buy box and if the partner's into it, some people just want a flat rate, and we're fine with that.
And I will say too, 80-20 for someone that's doing this at a high level, like Greg and his family, really good. You won't see many folks doing that. It's substantially better than what you'd see with parcel funders. I think that it's good to have a few of these people kind of in your Rolodex. And so you can mix and match, use a little bit of everyone's money. I personally, ideally, I like just using flat splits. Chris, I believe that's what you use, right? You just got flat splits with your partners. But Chris has gone the route of finding people that are one layer removed from land, right? They're sophisticated in terms of real estate. They understand how the model works, but they know nothing about the splits, the spreads, the standards here in land investing. Chris, do you want to talk about that a little bit? How you went about that?
Yeah. So there are chances of you guys knowing someone in your life that invests in real estate, like traditional real estate, especially commercial, multifamily. It's in California. If you have a cap rate of like 5.5%, they're killing it.
Yeah.
So return on their money, like, and if you start to get close to 10% annually, that's like their brain explodes. So it's a super easy avenue to be like, yo, I could pay 20%. And you can borrow, they're cool with lending their money for like a long time. I have been hyper conservative where I tell them it's like an 8-month turnaround, 10-month turnaround, knowing that I'll get rid of the property and well under that. But they have no idea how quickly land sells. And so for them, they're like, great, that sounds really fast. 8 to 10 months, get my money back, 20%, awesome return. And they will hand you as much money as they have.
And what did you do in terms of networking? Was this someone already in your circle, or were you proactive about finding folks?
No, it's just people in my circle, kind of that I've known, or who's like asking, what I've been up to, how my, whatever business has been going on, how it's been going. And I kind of told them, knowing that they had capital to spare. Those I'm opportunistic, so those that don't have capital to spare, it's kind of a shorter conversation than those that do. And those that do, just kind of, well, this is what I do. It's kind of interesting. Play it off, and then they bite. And it's taking candy from the baby. It's super easy.
It's a very easy pitch. Like I had a call last week with a guy who's from the hedge fund world who wants to raise some capital for us. And I mean, really, like in that world, 15% and above, like you're walking on water at that point annually. Like you're a god, right? I don't think you could deploy the same amount of capital that hedge funds would, like billions of dollars annually. But even if you could take 10 million bucks and get them a 20% return in a year, it's like, whoa, right? And we all know we could do that pretty darn easily. So I like going 1 or 2 layers removed. I do want to find someone that's savvy. I'll tell you guys a quick story here. So first off, you want to be careful when you're soliciting for investors, right? There's a lot of red tape there. And so I've had some people in the past that have gone through programs with us that have done some things that are no-nos. So you want to be very careful. You don't want to like explicitly advertise for investors. When I first started, I was a little more aggressive. I would just go on Facebook and like go to multifamily forums and real estate forums, and I was just messaging people, right? And they're like, I would try to get them into my ecosystem, and then I would pitch them. I wasn't just like putting it out there unsolicited. Yeah, but I'm still probably doing some things wrong. And that worked okay. But what actually worked best for me was I just started, and some people are private. I understand that. Some people don't want to share. how much money they're making. And I fall into the same camp. I don't want to be boastful, but what I would do is I would just share a few deals here and there. And I wouldn't even share the best deals. I would just put them on my story or Instagram or what have you. I would try to like underplay it. I would just put like okay deals. And that got so much inbound interest. And what I started doing was I started hosting these weekly calls where I called them fireside chats with the land pioneer. I wasn't really trying to pitch anyone on anything. I just got people on these calls, was talking about the deals we were doing. And sure enough, people said, how can I get involved? And we started getting invested that way. The trouble with that, though, is a lot of these folks were business owners, but had no context on investing or real estate investing. And that became a nightmare to manage these expectations. And like, we had at one point 15 different partners and we were like giving them updates weekly. It was just too much, right? So I like finding people that are savvy, they understand investing, they hopefully understand real estate to some degree. Those have always been our best deal partners. I started with a guy 3 years ago who I think he started with 50 grand with us. And he had wanted to start like syndicating real estate, but he wasn't going to do it. He owned a gym at the time. And, that 50 grand turned into a couple $100,000, and he's been our best deal partner for a very long time. And so once you find just a handful of those, you can really go pretty deep with them, and you're going to compound their capital, and they'll give you more money, and they'll start telling people, and it's like it's a domino effect. So I don't know how open you want to be with what you're doing, but there's no harm in sharing just the deals you're doing and opening up conversations that way. And then I would try to qualify that the people actually have some investing experience.
And then so to kind of piggyback, I would start with, I know Sumner's mentioned many times, and the course mentions it as well, but friends and family is going to be like huge. And it may feel weird at first. We're like, I don't want to ask my friends and family for money. Yeah. But you're not asking them for money at all. I mean, honestly, you're benefiting them as much as they're benefiting you. You're making them so much cash faster than they can make it anywhere else. And after you kind of do a couple deals and you get comfortable with your business model and how quickly you can sell land, it doesn't feel like an ask. It almost feels like you're doing them a favor, because really you are. You're making the money so quickly. So if you can kind of change the way you think about that, it's going to help you a lot approach cousin, your parents, whatever it may be, because it's really not. Yeah, I get it being weird at first, but you're really helping them more, or just as much as they're helping you. So something to think about.
Say under promise and overperform on that, because if you tell Sumner is going to ask for money and he'd tell people what type of returns they could expect, they're not going to believe him. So just
I like setting expectations very, very low, right? And so the deals I was sharing were like, we bought this for $4,000 and sold it for $8,000. People were like salivating over that. I wasn't showing the deals that were crazy home runs. And like Chris talked about too, I really like setting much longer expectations for turn times. So when you sell something in 90 days, people are like, oh my God, you did so good. So yeah, be very conservative with your expectations. And then the other thing too, I don't love this long-term, but dude, we all got to start somewhere. And sometimes you got to get scrappy. When I had those 15 different deal partners, dude, some of them had 10 grand, 7 grand, like not much money that they were sinking into these deals. But that got us a couple $100,000 collectively that we could use. And so some of them are friends. I didn't do any family. I'm not really about going to family. No one in my family has money. So friends I'm okay with. And sometimes you got to cobble it together with small deal partners, and that's okay. Yeah.
So would you sorry, someone else going?
No.
Like, would you build, when you were doing that with like a bunch of different people, did you gather the capital before you got into the deal, or would you find deals and let them know about it?
Hey, Igor, would you mind me? There you go. Yeah, great question. So this is my idea with often with new folks that join the program who want to like raise capital before they have deals. It doesn't really work that way. Ideally, you have a pipeline, you're getting deals in always. You should never be pausing that. And you've always got people that will fund your deals, right? You've always got deal funding companies out there that you can lean on. So capital is not really an issue, but you do eventually want to find cheaper and cheaper capital. So I would never pause your acquisitions. You always want to have a pipeline. I was proactive in terms of probably raising a little bit more than I might have been able to deploy right then and there. But yeah, you always want deals in the pipeline for sure. So I don't do it necessarily like opportunity to opportunity. I always have a pipeline. I got people on a group call. I talked to them about it. And then I just said, when we have something, we'll share it your way. Some people got deals the next week. Some people got a deal 3 months from then. So yeah, you should always never always assume you've got the money, because that mindset lends to you figuring it out. Never, I don't like playing the game of, waiting for the money to come in and then doing the deal type stuff. In the same vein, though, I think, that does it. That's all I'm gonna say on that. Yeah.
When it first started, the saying is like, money is the easiest thing to find, like, ever. Real estate investing, like, you find a good deal, like, money will find you. And that was like the craziest concept for me. Like, what are you talking about? Like, what the fuck? I'm broke. How the hell is this to find money? Like, that's so not true.
Yeah.
And it is unbelievably true. Like, it's the most true. Like, money is the least, like, it should be the last thing you're thinking about. Find good deals, and money, people will throw money at you, I promise.
Yeah, my first round with the deal funder, they were like chomping at the bit to buy my lots. Like, they wanted to buy them so quickly before I give them to somebody else. So you have a good deal, it'll go, no problem.
Yeah, Mike, I mean, think about it like this. How many people do you know that are satisfied with their current investments? Most people are like, I'm barely beating inflation. I don't know what to do. Like, most people, that's an issue for them. And so you just want to focus on the skill of becoming a great deal finder. It's not to say that the money, like, you do need to be conscientious and aware and try to advance your capital stack and get cheaper and cheaper capital. There is work that goes into it. I would really be focusing your time on generating great opportunities.
Great. Yeah.
What's up, Rylan?
Not much. Just walking. I'm in the Outer Banks.
You're at what?
I'm in the Outer Banks right now.
Oh, nice, man.
Yeah.
You're gonna go surfing out there?
Yeah, I surfed today. It was pretty crazy.
Is it big?
Super big.
Wow, dude, that's awesome.
Yeah.
My girlfriend made me watch the show Outer Banks, and I actually ended up loving it. So I want to go to Outer Banks. I'm a sucker.
It's nothing like it.
Yeah, I had a feeling. Is it more glamorized in the show, or is it nicer in person?
They filmed all that in South Carolina. So they didn't even film it here.
Wow.
Huh. Weird.
Yeah. So,
how's business been for you, man? What, you got any updates for us? Anything cooking?
yeah, just training my employee right now. It's been kind of annoying. He's kind of underperforming, so I'm gonna give him another week and see how it goes.
Welcome.
But like, it asked today, and like, I already taught him how to do what he was doing, and it just took him all day, and he didn't even complete the task. So I was pretty frustrated with it.
And he's in the acquisition role, right?
Yes.
What's the bottleneck that you're seeing with him?
So he's in acquisition role. I'm trying to come up with it, like a good template for him to follow to learn how to like negotiate and do all this stuff. And then I had him just doing like some Excel work today that I already showed him how to do, specific to data.
Yeah.
And he was just underperforming like on very simple tasks. So, like,
well, you know my standpoint on that one.
I know your standpoint. Yeah.
He should be just taking calls.
Yeah.
Yeah. Different role. And dude, you can bring someone on part-time. We're bringing on someone essentially full-time to do all of our mailing and pricing and whatnot. And so you can get someone plugged into that even part-time. When we started them part-time, we're bringing them full-time. It's really, really important to be very, very clear with your roles and keep them verticalized.
Yeah.
Yeah. But you'll live and learn, man. Part of the process. I'm glad you brought someone on. That's a big step.
Yeah.
Yeah. All right, guys. What else you got for me here? Someone's got to have something good. Give me a tough one.
You want a fun deal?
Yes, let's do it.
Alrighty. You want me to drop an APN in the chat?
Yes, sir.
Let's see, which one was this?
While Greg's pulling it up, Rylan, is your guy on the phones right now? Is he answering inbound calls?
Right now, he's like sort of like analyzing deals. So like I've been trying to train him how to look at deals that come inbound. So like I have him on the phones talking to realtors and talking to title companies to try to get quotes. But I haven't officially put him on the phones yet.
Okay.
Yeah.
Why are you waiting?
I think he needs training.
Yeah. Okay.
Oh, Greg, this is a funny one, my friend. Okay. I'll make this queued up and I'll share my screen here. We can all go through this. So this is an interesting one. Right next to the old detention center.
It's buy for. I think what was presented was buy for 25, sell for 50, but it looked a little bit more complicated than that.
Okay.
There's a bit of a backstory with it, but I'll let you look at it. But, yeah, so this is across the street from the county jail. The current owner bought it in 2008. We called the current owner, bought it in 2008, and shortly after decided that he didn't want to build on it anymore. We called the county jail, and they said they were proud to announce that they haven't had an escapee in 13 years. The 2008 is 14 years ago, so I understand why the guy decided to not build on it. And then we looked into it more. There's been so many escapes since then. So I think that's going to be, we're going to have to pass on this one. But this is one of the most fun dives I've had in a while.
Yeah, let me share my screen here. We can all take a look at this.
I thought there might be some commercial use for it.
Right.
Maybe there's only one bail bonds across the street. Unfortunately, I know that there should probably be at least 3 around every jail, and maybe a Subway sandwich or a bar. But the jails, I think it's like 450 beds, so
huge.
It's not, yeah.
Interesting. Okay. And in any other situation, it's definitely a pretty lot. Got some pine trees on it. This lot is a little over an acre. It's got nice county road frontage. Let's go see about the comp. So you guys are buying this at 25, is that right?
Yeah.
Okay.
It was 28. Yeah.
13 at 325. We got a 0.6 at 19. 50 does seem a little steep even without the jail close by. It's going the last year. It doesn't really seem like there's a lot going on for land sales out here. Let's come up.
Yes, slim pickings for comps. And there's no
Yeah, I mean, a lot of like a lot of the bigger acreage, you're at like 10,000 an acre, right? That's 20 acres, 13 acres. So if you chunk this down, I mean, you've got half acres at 21. I could see how this is probably worth 50 would be a stretch. This sold 4 months ago. Edgefield Highway road frontage, neighboring lot for sale. June, and then it sold in July, so it moved pretty quickly. Listed at 27, sold at 21. Yeah, I mean, even without the jail, I feel like 50 could be attainable, but it probably would take a while just based on, let's go see what's listed out here. That's less than 10K an acre. 75. So if we go 75,000, or we're at 18,750. Yeah, I don't know, man. I think even without the jail, that 50K is probably a bit of a stretch. Would I buy this deal? I think if the price is right, you can make just about any deal work, but I would probably be sub 10 on this. So I mean, the answer is, you probably already know this is a walk away type thing. But yeah, I mean, whoever the 50K comp, was this given to you by the investor, or is this what you guys came up with for 50K?
No, it's 48. It came from the realtor, factoring in the county jail. And I wasn't buying that. I was thinking the comps I was looking at, even though it's pretty hard to gauge, as you see, there's not
How
a
much?
ton nearby. You know, like a realtor's opinion is kind of valuable there. Like, you know, they'll know the local market a bit better than we can get off of like this wide range of comps. But the you know, without the jail, I guess it seems like it could be possible. If you look at the non-vacant land in the area, any of the single-family homes, it's pretty like upscale for like a rural community.
Yeah.
There's like horse farms and stuff. I just can't imagine what we call it, a buyer avatar. I really can't see who the hell would buy this besides the jail.
Right. That was my first thought, you know, maybe
Yeah.
do something with it. But if they could or wanted to, I'm sure they reached out to them a long time ago. You know, there's an interesting comp. One, there's just not much happening out here. I mean, there's not a ton of supply, but like in the last 6 months, there's 2 sales within, I don't know, there's probably like a 30-mile radius, maybe a little bit more. No sales in the last 3 months. We've got these 2 adjacent lots, which call that an acre or so, that sold at 42, you could say. Similar setup, slightly wooded, road frontage, main county road. Yeah, 50 is a stretch. For me right now, how I'm underwriting deals, especially in a market like this, but I guess just in every market, I'm applying a discount rate to everything just to be cautious, just because we don't know what the next 3 to 6 months look like. So at 25, after title fees, after photos, after marketing cost, I don't know, like you're in the deal probably closer to 27.5. There's just not a lot of spread there, even at 50, and that's assuming things stay how they are. The caveat here that I'm seeing, though, which would be in your favor, is that a lot of the stuff that's listed and sold is marketed really poorly. So if you guys put together a good marketing package, you might be able to fetch a little bit more and move it faster. But yeah, even without the jail, I think I would try to wiggle this down to closer to 20 for an acquisition price, and you could probably get it. Now with the jail, the only play here could be like an entitlements play, but at that point, what's it even really worth? Who's going to put anything there? I don't know. I mean, you know, like a Subway or a donut shop for the wardens and stuff. I don't know, maybe that makes sense, but the deals like this, like if this was a deal where the outcome could be a couple $100,000, sure, it's worth the legwork. But for something like this, nah. This is tough. Is this a newer investor or is this someone who's more seasoned?
Yeah, they're a bit newer. I think they were. I told her just take what the realtor says with a grain of salt.
For sure.
This is probably not worth the time risk. Although it was a fun.
It's fun luck for
fun
sure.
to review. Yeah,
that's a weird one. The thing is too, in markets like this, what I find, there's not a lot of supply. There's not a lot of vacant land sales happening. Most of these, there's probably not one land specific realtor in the whole county. So it's like, I really take their word with a grain of salt, and I would want a ton of different opinions. But yeah, it's a tough one. Anyone else got any more deal reviews they want to toss in here? Thing you guys want to get eyes on? No. All right. Well, we got 6 more minutes here. What do you guys want to fill that time with, or is everyone wrapped up?
I have one more quick question.
Let's do it, Mike.
So I'm still dealing with that really shitty property in New Mexico and the shitty realtor.
Yes.
You guys were talking about TikTok. Like, what are some different ways I could market the property? Because the realtor is just doing such a horrible job. I'm trying to like step up a little bit. And
yeah, for sure. Let me show you. Let's see if I can pull up some for you. I'm definitely not a social media expert by any means, but I like stuff that's sub 30 seconds, relatively quick and to the point. You want to talk about price point. Typically, it's going to be talking about down payment. So we're going to put pictures of the property, flash a little quip about the property. You know, great place to have horses. Get this for only $2,000 down. Then I like throwing some like the conveniences, like it's an hour away from this city and blah, blah, blah. So just like some high level stuff that's going to be engaging. I also like finding stuff that I can plug into hashtags. So like great place to have your tiny home. And then you can put the hashtags there and try to find an audience for it. But let me show you what some of our videos look like.
Like TikTok and like YouTube Shorts, you said that's like the 2 main ones. Like, is there anything else like traditional web, like land? I think I have to pay for land.com, right? Like, I want to be able to put it on there.
You got to payforland.com. So TikTok, YouTube Shorts, Instagram Reels, Facebook Reels. Facebook Reels right now, you'll get a ton of exposure on there. They're just trying to make that platform.
I made just like a traditional ad on Facebook, and I got like I got one share, one save, and 80 views in like 2 days. So
okay. Pull it up. Okay, so I've tried a lot of things. I used to do ones where I would talk about it with my face. That worked okay. I used to do ones where I'd like just record the listing and like show the screen. That did okay. And then I brought someone on my team, actually Keith, who Greg's now working with, who made some videos for us. She did a really good job. I can't find any of the recent ones, so I'm just gonna pull up an old one on TikTok. You guys can kind of see what this looks like. Let's get this queued up here. I like to try to use some trending audio on it. We got a drone video that we used here that looks pretty good. I don't think like a lot outline like added video. So we've done videos like that have done pretty well. I'm going to show you one. Let's see if I go way back here. I'm going to show you one that we made 70K from this video. I don't know why this video did so good. All right, this video right here, we made, I think, 75 grand. I'm going to show you how to buy a piece of land in 15 seconds. Head on over to thelandpioneer.com. Go over to properties, scroll and find the property you want. I'll take this one for $1 down. Go on over, hit reserve now. Place the $1 down payment. You just bought a piece of land. I'm going to show you how to buy a piece of land in 15 seconds. You know, you can get creative with it. And that video did really well for us. And then I used to do videos like this where I'd like just welcome to Tiburon, New Mexico. Now just narrate over it. Those did okay. So yeah, you can get creative. I definitely encourage doing it. Mm-hmm. It works best for the low end properties. You want to have properties where the price is something to where someone can make an impulse purchase, because that's really what you're shooting for here. You know, I did sell a big property on TikTok, but most of them are going to be small, low down payment stuff that they can just go buy right then and there. Okay. Catch is you need a website. Yeah, doesn't work without a website. Yeah, so that's the catch-22. But yeah, anyone got any questions on content for marketing properties or anything along those lines?
I would also just add on Facebook. Oh, go ahead, Greg.
Yeah, just New Mexico specific. I recently saw a viral TikTok about like someone off-grid living in New Mexico, and it's got like over 5 million views on it. So just stitch your land with that. It might be a good place to start.
That's good, yeah.
Yeah, never experimented with this thing, but that's a great idea actually to piggyback off of that. Also trending audios, so go find audios that are trending. That works pretty well. And I just try to like plug into like an audience. Like there's like horse people on TikTok or whatever. Like try to filter to them, you know. And those are good enough. You just want to plug into like a little niche. The thing is, it's like catching lightning in a bottle. Though I can't say that you're gonna put a TikTok and it's gonna go. It's like some of them work really well, some of them don't do anything. So it's definitely a volume game.
Yeah.
Yeah.
And continue to post. Oh well, Rylan knows better than me, and Michael probably posts more on Facebook than I do, but I do post all my lots on Facebook, and don't just do one post. Or necessarily pay for the ad. That's fine, but actually most of mine do better without paid promotion. And just list them in neighboring cities as well. So let's say you have one in wherever, some Dallas, Texas. Go find the neighboring cities around there and list all around, so you can have 4 or 5 listings. As long as they're different photos and the title is changed ever so slightly, you can have those, 5 listings working at once. 2 of them will take off and you'll get thousands of people clicking on the listing or reaching out, and a couple of them won't hit at all. But at that time you get, it's more of a shotgun approach. The leads are shit most of the time, but if you have nothing else to do and there's no other leads coming in, you might as well deal with the shit leads.
Yeah, that's kind of what I'm thinking right now is the train of thought.
Yeah, so I would get it on Facebook. What we used to do, so there's marketplace posts and then there's Facebook group posts. We'd use Facebook groups, try to find stuff that's local or relevant, again, different niches. And then what we would do is for the marketplace, we'd go into every major metropolitan area. I mean, in some cases, it'd be hundreds of listings. Some would hit, some wouldn't hit. But for those impulse purchase properties, people could live in New York City and want to buy land in New Mexico. We got a lot of sales that way. It's a pain in the ass if you're doing it yourself, but it is a way you can move it. Yeah.
What would be like the
Yeah.
high end of the impulse purchase price?
It's really about the down payment, right? So I don't
That's what I mean. Like high end down payment impulse.
For me, I'm like a 199 max kind of guy. We have a whole $49 down program, and we used to do a lot of $1 down properties. So yeah, 199. I think you could get away probably with $500 or so. I think people are more skeptical, especially on a platform like Facebook or TikTok or what have you. They don't know who you are, and you're interrupting their session. They're just making up their mind right then and there. So it's got to be such a no-brainer, right?
Yeah.
Really, really obvious. One of the other things that you have to stack on that on your website is a ton of social proof, and maybe a Google reviews page or a BBB page. That goes a long way. They need something to show that you're a real person.
Yeah.
Yeah. All right, guys. Anything else before we hop off here?
I'm gonna
yeah.
make a website to try to automate the whole down payment contracting process.
Mm-hmm.
As far as getting a developer for that, do you guys have any? Or
I do. Yeah, I'll put my developer in the chat for you guys. And if you say I sent you, he'll probably give you a discount. He's also extremely negotiable. So put that in the chat. His name's Sam. He's made a bunch of websites for us. You could probably get a website done for $1,000, $1,500, something like that.
Sweet.
Yeah. And the automation of the down payment stuff, pretty easy. Just use Moonclerk and whatnot, and it's pretty straightforward.
Thank you.
Yeah, of course. All right, y'all. I'll see you guys here on Wednesday. Appreciate you guys making the time. Hope everyone has a great week, and I'll see you guys soon.
Yeah. Thanks a lot, guys.
Bye, guys.
Later. Thank you.
Too.